Alrighty, so this is the second video that I've uploaded or will be uploading. This is kind of a continuation on really, really basic kind of, I think, things you should know as a beginner. You can pretty much find all this stuff online. Simple Google search will definitely tell you, but I'm trying to break this stuff down all in a way that makes it a little bit more digestible and kind of like a step-by-step order instead of Googling a whole bunch of random fucking questions and you're kind of just left with random answers, not knowing if you know everything and not knowing if you don't. So really quickly, I'm going to cover what a candlestick is. Obviously, candlestick, you can see these, I guess, rectangles. They're called candlesticks. You can change them up to a whole bunch of different versions of these, but I don't trade like that, so I'm not going to really cover that. It's not important. You can definitely just stick with the candlesticks to make money. So essentially, let's just start right here. This white candle or grayish candle. This candle, it represents time. Now it's a little confusing at first, but if you go on the top left, you can see that I have selected the time frame of 4 hours, 4-hour time frame. I can simply press 1, press H, go to the 1 hour, and now basically the candles will change. So this candle right here, this white one, represents 4 hours on the 4-hour time frame. And then if I switch it to the 1 hour, this black candle right here represents 1 hour. So basically the candles represent time. If you take a look at this last white candle, we'll circle this really quick just to make it a little bit easier on you guys. Go on the 1 hour, and essentially that 4-hour candle incorporates these four candles right here. That black, 2 white, and then black again. Pretty basic, kind of some very beginner level kind of stuff. But you know, everyone starts somewhere. So let's go down to, what does a candle represent? We kind of already covered that. It has to do with time. It also has to do with the amount of movement inside of that time. Meaning, we'll now get into the body and the wick. Essentially what this candle represents is, there's a body right here. This is the body, that portion. And then these little top and bottom lines are called wicks. So essentially, let's break this down a little easier. Let's just create a candle right here. If it is a candle going up, a bullish candle is what people call it, like this white candle, this means that the candle begins at the bottom of this body. So when the 4-hour time frame starts, basically it's like when this candle starts at 6 o'clock, at 6 p.m. on the dot, this candle begins right here at the bottom of it. After 4 hours, it will end at the top of the body. So essentially what I'm saying is, if the candle began here, it eventually will end there. That's all a body is. It just represents the open and the close of that 4-hour time period. The wicks represent, however, where price has gone within that time period. Meaning, price started here like we said. It could have gone here, and then down, and then up all the way here. But after that 4 hours stopped, it ended right here. Meaning this is the price movement during that 4 hours, and it's all basically compacted down into this single candle. And if we go on the 1 hour, we can kind of see what I'm talking about. You saw that the candle started, went up, and then finished right here, and you got that top wick portion right here. And so, I mean, if we go back to the 4 hour, you can see it's going to have a top wick right here. And that's that 1 hour candle that you saw. Essentially, that's kind of the basics, how candles are formed. And the sell candles or the bearish candles are the exact opposite. Meaning, if we take a look right here, this is a bearish candle. It began at the top, and then within the 4 hours, it did its course, pushed up a little bit with this wick, came down here to the bottom wick, and eventually closed at the bottom. So really quickly, buy candles start right here at the bottom of the body and end the 4-hour period at the top. Bearish candles, which are the black ones, that start here and end at the bottom. And the wicks represent where price had gone during that 4-hour period. And so you can kind of use that however you'd like, but I'm just trying to break down what candles are essentially. pretty basic. Probably got it from a different YouTube video or somebody else, but might as well break it down because not everyone knows everything when they're starting. Definitely, I did not have a pretty good approach. I had to YouTube a whole bunch of crap and it wasn't all in one place. So, yep. And so how do timeframes correlate with candlesticks? We kind of already covered that. I broke down this 4-hour candle and I showed you how on the 1 hour it can be represented as 4 candles. These 4 candles right here are that 1 4-hour candle. Let me take a look. The boxes are weird because it's like based on ticks, but essentially that 4-hour candle is these 4 1 hours right here. And this ultimately goes for everything, where you can go on the 1 day, take a look at this candle right here, and that would obviously be represented with 6 4-hour candles for a 24-hour period. What someone new should kind of watch out for. This industry of finance and all this trading shit is pretty corrupted. Has a ton of complete bullshit, and there's a ton of stuff. People trying to sell you courses. I'm sure you've gone on all the advertisements at the beginning of YouTube videos. Buy my course, buy my indicator. Ultimately, you can go up here, technicals. You can add all this shit randomly. Looks really cool on your chart, but while indicators do work, they're all based on price. Basically clean price action, just the candles. All of those are just mathematical equations to print basically fun pictures and stuff you can use to enter trades on. But it's all based on what you're looking at. The computer doesn't get any special information that you don't get. It maybe uses math to kind of calculate different percentages and crap like that. But ultimately, you're not at any disadvantage just trading the chart. Everything ultimately comes from here. So naked chart traders are kind of what I strive to be. I don't like adding all the moving averages, stuff like this, all the crosses. Whoa, didn't even open that up. Don't like all this crap. Don't need all of that. X, all this crap. Don't need it. I'll get into all these things that I have up here because as I'm talking about indicators and why not to use them, I have a few. But it's not because I can't see them with my own eyes. It's simply because it just makes my time a little bit easier. And I would be trading it no differently with or without the indicators. So this is kind of a pretty basic approach. Don't buy people's courses. Everything you ever need can be found on YouTube. But I mean, I will say courses do kind of compile all the information in one place. But ultimately, a course is not going to make you profitable. Time behind the market and just spending and experiencing and kind of building up your intuition based on how to trade and stuff like that will ultimately kind of make you a profitable trader. Last little tidbit is the amount of people that like go to the gym and stuff like that, they don't actually kind of follow through, and they'll go for a week or 2 or 3 weeks, get a gym membership. I'm sure anyone who does go to the gym knows at the beginning of the new year that everyone gets a gym membership and everyone says that they're going to do all this bullshit. Doesn't actually follow through. I've been going to the gym for a long fucking time, so I've seen many years of all that crap of people not actually committing, and people can't stick to a diet and all this shit and stay disciplined. So in a world of pretty undisciplined people, it's not hard to stand out. So while it is, I don't know, it is pretty hard to get into a place where 87% of people lose money. Me being the top 1 or 2 percentile of people who go to the gym and have been going to the gym for the last 4 or 5 years, it's not that big of a feat for me, at least. So this is why I kind of stuck with it. And after about 2 years of it actually like going at it, being consistent, it kind of showed up. Some people will get profitable in 6 months. Some people will take 5 years. Some people take 2 years on average. Some people won't ever get profitable no matter the time they put in. It's just kind of one of those businesses, but I mean, every kid wants to be in the NBA, and everyone wants to try and play this and do that. But essentially, it's a hard industry to get into because there's a whole bunch of shit that you need to learn on the way, and there's not exactly one place to learn it all from. So that's what kind of makes this hard. Mentorships do help, but it's ultimately up to the person, not the mentorship, unless it's some scammy shit that you bought. But yeah, I don't think the 87% of people that lost money actually put more than like a few months into this. because ultimately the 13% are the ones who put in like a good year, 2 years, 3 years to actually kind of see the results they're looking for. So that kind of all goes back to the gym idea of you can't hit the gym, can't be consistent in the gym, and there's no reason to think that you can be a consistent trader, because it's the same thing, just a different street. So yeah, that's it. Next video I'm going to kind of cover risk management and kind of explain the casino theory, coin flip, all this shit, risk to reward, get a little bit into like the numbers game. Kind of boring, but you know, I'm a kind of a nerd. I like the statistics side of stuff, and I like to kind of break it down for people that don't understand it too well, and to give someone a good approach and have them not lose a shitload of money like I did. Anyways, that's it. Thank you.